Time now for the closing countdown. Let's trade the close with Herb Morgan, Chief Investment Officer at Efficient Market Advisors. Herb, what are you watching going into this close?
Well, like everybody, we're watching to see the volume into the close, but right now we're focused, like a lot of people, on this yield curve inversion. And yes, 4 inversions in the last 40 years have preceded recessions, but we really think that this one is incredibly different. I mean, back in '78, you had high inflation, Fed hiking rates, they continued hiking rates. In '88, high inflation, Fed hiking, continued hiking. In 2000, you had an asset bubble that they were worried could lead to inflation, obviously in stocks, 27 times earnings. And then in 2005-06, you had the real estate bubble. This time we don't have that. So with the Fed already having cut once, likely to cut again September 12th, a BOJ and an ECB in September likely to ease, we think this selling pressure is going to pass, and it's a great time to accumulate equities.
Okay, you just laid out how it's different than times previous. Does that mean that its veracity as a recession indicator can be called into question?
Well, I think you've got 4 for 4. I don't think 4 for 4 is a high veracity indicator of anything. I mean, in statistics, we need 100 data points to make a conclusion. We certainly don't have 100 yield curve inversions. So we have to look at the 4 and say, what do they have in common and what's different now? And then we can make that conclusion. And I just don't think we can draw a U.S. recession conclusion from this inverted yield curve. Slowdown, yes. But think about the major fiscal reform we had with the Tax Cut and Jobs Act, significant deregulation. Now these ultra-low interest rates stimulate the consumer. They stimulate business demand. They help with CapEx. 7 million job openings for 6 million unemployed. It's hard to envision the U.S. headed to a recession right now.
So, Herb, just quickly, are we oversold today then?
Yeah, I think we're close to oversold. Look, we had a higher high in the last high. We had a higher low in the last low, early August. The market trend still looks up. I think you could get a little further down, and then you'll get to that oversold indicator. But that's timing the market. I'm an investor. We're in for the long haul.